You are now listening to The Unwavering, the movement dedicated to educating and empowering the brave men and women who have or are still serving our great nation. Today we have a good friend of mine in who's going to speak to us a little bit about realty, utilizing that VA home loan, and how to get the process started so all of you veterans can take full advantage of it and make sure that you're getting the most out of that benefit. Before we go ahead and get started, as always, I want to go ahead and say thank you to those of you who are still currently serving or have served. We hope that sharing these benefits on a consistent basis and being able to share this information with you, your family, and loved ones makes a huge difference in your lives. So if you guys do like today's episode, please stay tuned because we will be following it up here within the next few weeks, speaking to the loan officers. But at this time, I'm going to go ahead and transfer the mic over to Dan. Go ahead and introduce yourself.
Hey guys, my name's Dan. I served in the military for 5 years on a submarine. So we have a special guest on. His name is Alan. I'll let him introduce himself.
Hey, how you doing, everybody? My name is Alan. Been in the business for about 6 years now. Been licensed for 4. I was a full-time assistant 2 years prior to that. Ran more of the transaction side, the paperwork side in those 2 years. And when I became licensed, I just went full-fledged and, started doing everything on my own. As of now, I am partnered with my father, who's also a realtor. He's been a realtor for 20 years full-time out in the Valley. So it's a good partnership at this point. We kind of bring both the modern side of it, where I handle a lot of the technology, and my dad, of course, brings a lot of knowledge and experience into the team, so we make a good team together.
Awesome. And just a real quick note for everyone listening. Alan is a realtor based here in Southern California, so we are going to try and keep everything as general as possible. I know a lot of you guys listening may be in another state. You may be in Texas, New York, Michigan, so we're going to try and keep it as basic as possible and tell you guys about how to utilize this benefit, how to use your VA home loan in general. But if you guys do have questions, we will, at the end of this episode, include how to get in contact with Alan and their team if you guys are looking for homes or properties in the Southern California area. So Los Angeles, Orange County, Riverside County, San Diego. Again, I brought him on here because he is someone that I trust wholeheartedly and know will give us his honest opinion about stuff and the information that's going to make a difference in your guys' lives. So we'll go ahead and get this started. So Alan, what's kind of the process that people approach home buying? And this is in general, right? Not just veterans, not just service members, but in general, what's kind of the process? I know that you have to find a trustworthy realtor, then start talking to loan officers, the bank, getting pre-approved, searching for a home that you actually like. And then once you find your dream home or the one that appeals to you the most, then you make an offer and go through escrow. Can you kind of just break it down into a simple list and then we can elaborate a little bit more on that?
Right, yeah. So the first step would definitely be finding a trustworthy loan officer. There's loan officers that work for banks, particularly the big banks, or there are loan officers that are kind of brokers and work for many banks. I would advise that you speak to at least 3 loan officers, maybe from, maybe your credit union or the bank that you bank with, and then find another 2 loan officers that you can run numbers through. The reason being is different banks, different loan officers, they offer different rates, different programs, just depending on your needs. So that would definitely be the first step in the process, so you can at least get your qualifications as to what you qualify for on a purchase.
I'm glad that you brought that up, the rates, and I know we're going to dig deeper into it as the episode goes on. But as far as rates go, having a low rate and going up maybe a fraction of a percentage or a full percentage, how big of an impact can that make on you? Like, are we talking, a difference of a couple $100? Are we talking thousands of dollars?
Oh, we're talking a couple $100, on the monthly payment, but definitely in a 30-year term, you're talking about thousands of dollars, in the length of the loan. So it's definitely important to make sure that you're shopping around to make sure you're getting the best rate at the time.
So for these loan officers, are you finding them at the bank? Do they have offices there, or is it usually an independent office somewhere?
No, usually you can find them at the bank. If you go to your credit union or whatnot, you can find your loan officer there. But online too, there's a lot of loan officers now, a lot of online banks that you can go through as well.
So when you are going through the process, have you seen from your experience, again, I know you're not talking as, a loan officer or trying to represent them in any way, but from your experience, have you seen that credit unions offer a little bit better rates than your standard banks? Or, what have you seen? And from your experience, if you were to purchase a home today, what route would you take?
Well, my experience has been that the loan officers or the banks, they'll give you a little bit higher rates. I mean, at the end of the day, they have a lot more overhead to cover. They have marketing costs. They have to pay employees and whatnot. The lenders that I utilize are more of brokers, and they work for a small firm, but they're allowed to loan on many banks. So, for example, they have access to about 50 banks instead of just one bank. So depending on your individual situation as a buyer, it might benefit you to use a completely different bank. And that's why a broker would be able to facilitate that to make sure that you're going to find the bank that's going to suit your needs best.
Okay. So moving forward, once you have found a realtor that either someone recommended to you or, you've heard about, saw ratings, and you trust that realtor connects you with either a loan officer or you go and find a bank loan officer. What's the next step after that?
So once you do find that loan officer, you're going to get pre-qualified. They're going to ask you for, documentation in regards to your income, the last 2 years of your tax statements to see what you qualify for. And you want to make sure you knock that out first.
I do want to touch on that subject. I did talk to your good friend Javier, who is a loan officer. And again, for all you listeners, we will be talking to him in the future. But when I asked him, I'm interested in potentially purchasing a home within the next year or so. What is a list that you can give me? This is what he shared with me. For all of you guys listening, when you do go to speak to these loan officers and get pre-approved for a set amount of money, here's just a small list of the things that these loan officers are going to be looking for from you. The first thing is a copy of your driver's license. They will then need 2 months worth of pay stubs. They will need 2 years of W-2s, and then any retirement account statements. For all of you guys who are in the military, that means TSP. If you have gotten out of the military and been working in the civilian sector, that could mean 401ks, savings, retirements, all those different things. So that's just a small list, but the reason why I tell you this is because you want to put yourself into a position where you get the max amount possible during this pre-approval process. So that means if you guys know your credit's not the greatest, start working towards those things now. If you know that right now for the next 3 months, you're working towards paying off other bills, whether that's a car, whether that's a credit card, you may want to take a little bit of time until you show them your bank account and where your money's going. If you guys are about to get a better paying job, I would recommend that you wait until you get pay stubs from that better paying job, because these are just different things that they are going to take into account and ultimately say, okay, they've got excellent credit now, they've got a way better paying job, and you know what, they originally wanted this amount of money, but things are looking good and we can actually bump you up to a little bit higher. So just start thinking about those things now and start finding those documents, or at least preparing to have them ready when you do go talk to the loan officer or the bank. So getting into that, Alan, once you have started, right, and you do get pre-approved, how long does that pre-approval last? Because I know when I was going through and, I was talking to you about purchasing a home, that was one of my biggest questions. If I get pre-approved, is my pre-approval for, let's say, $450,000 or $480,000, is that only good for this one house that I look at? Or say I find another house that's an equivalent price but in a different city, does that still count? So how long does the pre-approval last? Is it a set amount of time, 30 days, 2 months? And on top of that, does it only apply to that one house that I'm looking at, or can I use it for multiple houses?
Yeah, so once you get pre-approved, that pre-approval is good for about 3 months before you would have to submit new paperwork to your lender. But you can use that pre-approval pretty much for any home in any city. If the lender says you're pre-approved up to $450,000, we will shop for homes within that $450,000 range. I don't like to focus too much on the actual price of the home. That kind of gets us in the ballpark, but in my specific area where I'm at, there's a lot of higher tax neighborhoods, so it varies by neighborhood. So I always like to get the payment amount from the lender. What is your max payment amount? Because this house that's $450,000, you can have a certain payment amount with a low tax rate of 1.2%, but you go across the street to a new neighborhood and they have a tax rate of 2%, that's going to bring your overall purchase power down. So you're not going to be qualifying for that $450 anymore. You're going to have to bring that price a little bit down. So at the end of the day, I look at the monthly. That's definitely the important thing to look at.
Right, and that does take me into another thing that I know is going to be important to a lot of the listeners, and that is these approvals. Say I get approved for 460 or 480,000. The VA, now we're getting a little bit into the VA home loan and things like that.
Right.
If I do utilize the VA, it does depend on the county that I'm applying to, right? Or even the state, because if I ask for a VA home loan for $480,000 in Michigan, odds are I'm not going to get that amount of money. Now in California, where housing prices are a lot higher, the VA may approve me for a higher amount. So is that correct when I say that?
Yeah.
That it depends on the county and the state?
The VA definitely, it's online. I mean, they determine what the max price should be for the specific area and specific county. So yes, every county will have different VA max limits. In LA, it's somewhere, I think, now closer to the 700,000
Damn,
range.
we got a mansion or something. 700,000?
Yeah, more like a two-bedroom and 700 square feet, something like that.
Let me get a shack. Here's $700,000.
Yeah, and out in the Riverside County area, it's 424,900, somewhere around there. But basically, the VA will loan you that money up to the loan limit. Anything after that, it doesn't necessarily mean that you don't qualify for. But any difference that you need to make up, you're going to have to come out of pocket 25% to cover that difference of the max loan limit.
Okay, so I just want to clarify on that a little bit. So for those of you guys who may be a little bit confused, what Alan is trying to say is, say the VA approves you for $700,000 in Los Angeles, but the house or the bedroom that you're looking to purchase, the studio apartment that you're looking to purchase for that amount is actually $715,000 or $725,000 to make it easy. That means that the remaining amount that is over the $700,000, so in this case it would be the $25,000 that we're talking about, you would actually have to come out of pocket for that. So I know all of us listening are like, well, the VA home loan, I shouldn't be putting anything down. Yes, that's correct. There's also going to be, some reasons why you may or may not credit, different things like that, which, Alan can elaborate on. But in general, once you cross the VA limit per your county, you are going to come out of pocket. And you said that was...
It's 25% of the difference.
Okay, so in the case that I just mentioned, that means you would have to put 25% of that $25,000 down in order to be eligible for that home. And that's assuming, that
you qualify for
that
for
you
a higher
qualify
loan.
for a higher loan, and that the people who are selling the home even want to get involved in the VA process. So there's a lot of things for you guys to think about, but again, we just want to share this information with you guys and give you things to start thinking about now. That way, when you do find a home or you are in a position to be able to make a purchase, you're well prepared and the process is a little bit easier for you. Thank you for mentioning that. Now, I do, and again, I really want to start focusing more on the VA portion of it. For the VA, I know that there are certain fees in general purchasing a home that a disabled veteran versus a non-disabled veteran may not have to pay for. So can we kind of get into that? What are the benefits that just your standard veteran would get, and what are some of the benefits that, in addition to those, a disabled veteran would get?
What would you call a disabled veteran? Like 100% disability or?
Anything over 10% would be considered disabled.
Gotcha.
Veteran. The main thing that the disabled veteran would not have to pay for is the funding fee for your loan. The first time you use your VA loan, I believe it's like 2.15% funding fee that you have to pay to utilize your VA loan. That doesn't necessarily have to come out of your pocket. You can finance that into the loan itself. The VA uses that. They put it in a pool nationwide, and they use it to kind of offset the cost to the taxpayers. And also, if there's a loans that default, I believe they also use some of that money to cover some of those losses on any VA loans that default.
So that doesn't go towards the purchase of your home?
No, that does not go towards the purchase of your home. That's an added expense.
If I bought the Los Angeles max amount of $700,000, that's a significant chunk of cash. That's like another, I don't know, 18 grand or something like that.
Yeah, that's like,
and that's, you have to pay that. You said there's a variety of ways.
Yeah, you can come out of pocket or you can finance it into the loan. I mean, at the end of the day, the VA loan is a 0% finance loan, but there are expenses associated with purchasing a house other than the down payment. There's things, closing costs that would, escrow fees, title fees, and impound accounts for taxes. So you do have other expenses when purchasing a home.
Can we kind of just talk about some of those expenses and in general, because I know that it varies state from state. I know that, certain states on the East Coast have different things like co-ops and things like that and different fees.
Right.
But now speaking to the listeners, can we kind of touch on, Mello-Roos and different fees that we can be looking at, homeowners association, what to look for and what they can kind of expect or how they can prepare for those things?
Yeah, so the fees when purchasing, you're going to have your down payment and the VA is going to be zero. Then you're going to have your closing costs. I average it out to about 2% of the purchase price. Those are going to be your fees in closing costs that you're going to have to either come out of pocket or finance through your lender. When it comes to purchasing a home, your fees are going to be, home inspection. In my area, a home inspector will charge for a regular size home, a 4-bedroom home, 2,500 square feet, anywhere from $300 to $350. So that's going to come out of pocket, and you're going to pay for that at the moment that the inspection is done.
So HOA?
HOA, those fees are added on to your monthly payment. You shouldn't be paying. There's an HOA transfer fee. So every time you transfer names from one property owner to another property owner, the HOA charges a certain amount depending on the HOA to transfer that ownership over, paperwork fee. That varies from HOA, but it's in my area, it's like $350 for the properties out in the southern Riverside County area.
So, like for escrow, right?
Mm-hmm.
I've never bought a house, so I'm not sure of all the laws and what everything comes with it. To me, escrow sounds like a cool new shoe brand or something.
Yeah.
But, so escrow is just like, before you actually buy the house, it's like an agreement that you're going to wait for what reason?
Yeah, no. So escrow, they're a third party in the whole home buying process. So you have your, the seller side and the buyer side. The escrow is kind of that third party that makes sure that everything's up to date on, laws and whatnot, all the paperwork signed correctly, and they're making sure that they're holding on to the money. So, no one's going to run away with that money, and they won't release that money to either the buyer or the seller unless there is an agreement between the buyer and the seller. So they're kind of that.
So if something's like messed up on the contract, like with whatever you agreed upon, say there's like excessive termite damage that's found out afterwards, then you can say like escrow, like, hey, give me my money back.
No. You would negotiate it. You would try to negotiate it with the seller as to the excess termite damage, but it's not necessarily that escrow is going to give you your money back, but they won't give that money to the seller without you authorizing it. They won't give that money to the buyer without the seller authorizing it. So they're kind of just making sure that everything's even and, there's not a one-sided type of transaction.
Are there any like benefits to using the VA loan with escrow, or is it just pretty much the same for everybody?
It's pretty much the same for everybody.
Okay.
Yeah, there's not necessarily any benefits for escrows with VA loans.
One thing I do, and I'm glad that you brought up home inspections, because talking to you, Alan, and a few other people, that is one thing that the VA does really well, is they hire inspectors to make sure that the property is where it should be and it's
not haunted.
I don't know. I think they have sold some haunted houses before. So
big,
if you're into purchasing one, which
big fear, like, you agree to buy a house, like it's in escrow, you're like, oh, kind of like checking it out, and all of a sudden, like the previous buyer's mom died in the basement, like doing the laundry or something. It's like you don't want her walking around doing laundry all the time. You got to watch out for that sort of thing.
I've had situations like that happen before,
Wait, are we joking or are we being
No, I'm serious. Yeah, I had a situation where we wrote an offer, we submitted the offer, and the agent was going to accept our offer, but right before he accepted, he decided to give me a call and let me know that the prior homeowner had committed suicide in the master bedroom. And
that's a problem.
Yeah. So I let my clients know, and I said, hey, this is a situation, and they had a newborn and a toddler, and she was pregnant, and it was a great home, and it was a great price, but you find out real quick why it was a great home, and the price was great,
a little bit more negotiating power all of a sudden.
Yeah, and some people, it's really up to individuals, but some people that doesn't bug them, and they'll take the good price, But for others, that's a big thing, and for this particular client, they said, no way, Jose, and we found him something else.
I just got goosebumps, so let's get off that topic real fast because I don't do ghosts. So yeah, back to what we were saying earlier. Home inspectors. I know that's a huge benefit, but I also know that there's kind of tricks and different things because they are very selective. Say, for example, you have an open hole in the ceiling where they're going to put surround sound or they're going to put a ceiling fan, but they didn't install that ceiling fan. I have heard, and I don't know, maybe you can elaborate whether this is true or not, But I have heard that, if there's hanging wires where there's supposed to be a ceiling fan, that sometimes the inspectors will be like, hey, you know what, that's an issue right there.
Right.
Which is good because I know that they're looking out for us. But can you kind of explain what are good things that they do for us, and do you recommend that we have an additional inspector, or are they good enough? How does that work?
I personally use a home inspector. He's just a home inspector. He doesn't necessarily do only VA home inspections. He's just a home inspector in general. He does give a discount to military members when doing these inspections. But basically, the home inspector, I highly recommend that when you're purchasing a home, you hire a home inspector. I mean, the inspection is going to cost you hopefully less, than $400 out in my area, but they will go through the entire home. The main purpose of an inspector is they're going to check the main systems of the home, the AC, the plumbing, electrical systems. So they'll run through the entire home, and they'll basically go through everything to make sure that everything's working properly in the home. I've had situations where the home inspector goes through and he finds out that, this AC system's not blowing. It's not blowing cold. An AC guy comes out and he looks at it and he says, hey, you know what? This is going to cost us $10,000 to replace the system. You can't fix it. So in that case, we pulled out of that escrow, and the buyer lost out on his home inspection, but he saved $10,000 that he didn't have to come out of pocket once he already moved in to this property. So you got to look at it as you spend the money and you hope that nothing's wrong with the property. If nothing major is wrong with the property, then you're good to go. If something is majorly wrong, then there's a part in the escrow where you would ask for repairs for the seller. So the buyer's agent would then ask the listing agent or the seller in writing, hey, my home inspector found this, and this. My home inspector provides us with an electronic report with pictures and descriptions of everything that was found within the property. And I will use that as a template and send it over to the listing agent to say, hey, look, this is what we found. This is what we would like fixed. Now the seller could come back and say, hey, we'll fix it all, no problem, take care of it, and we move forward. Or they say, hey, we'll fix 3 out of 5 items. If you guys are okay with it, we'll move forward. And sometimes they'll come back and say, we're not fixing anything. It just really depends on the sellers.
Like a buy-as-is type deal.
Yeah, and out in my area, it's a seller's market. There's a demand for property, a lot of buyers. So sellers know that the moment that you walk away from that property, there's going to be another 3 buyers wanting it. So it just really depends on the seller. But usually they're pretty good about fixing things. I always advise my clients, like, the inspection is mostly for big functionality type of items, not too much cosmetic. I mean, I'm not going to ask them to paint the house.
Right.
Or replace the carpet in my request for repairs. If it comes down to a big item, for example, this AC that we were talking about, it was a $10,000 unit. I reached out to the listing agent and we negotiated. I said, look, it's going to cost us $10,000. If your seller doesn't have the money to fix it or they don't want to fix it, let's renegotiate the price and bring this price down, or at least maybe we can get a credit back from the seller through escrow, a $10,000 credit, something like that. In this case, the seller wasn't budging, and we canceled. So,
like Alan said, these tools are in place to cover you as the buyer. You want to have the max amount of leverage and people in your corner when you are going to make that decision to purchase a home, because purchasing a home, it's not like you're purchasing a car or a new TV. It's something that most likely you're going to be locked up in for several years. So you paying up front to get a home inspector, you finding a trustworthy realtor that's going to tell you, hey, in my experience, that HVAC, that AC system over there, or that water heater looks like it's probably going to give out within the next, year to 2 years. Those are things that I look for, because I don't want to walk into a situation where, I think I'm getting this great home and all of a sudden I move in and 3 months later, a year later, I owe $10,000 to get an air conditioning system fixed or something like that. So making sure that you guys align yourselves with people who are trustworthy and experts in their field is going to make a huge difference in not just your buying power, but what you have to face in the future, trying to avoid some of those repairs and some of those fees. So just something for you guys to think about. Before we end this episode, and I know it is a little bit longer, so hopefully that still works for all of you guys listening, but before we end this episode, I just want to go ahead and go over the escrow period. What is best case scenario of escrow? What's worst case scenario? Like, is this a process that's going to take, a few days, several months? I know it obviously depends on the situation. If the home's in foreclosure, There's so many variables, but in general, from your experience, what's best case scenario? What's worst case scenario?
Yeah, from my experience, most common is 30 days. 30 days escrow from the moment that we submit the offer, you get the offer accepted. That's when those 30 days start counting. It doesn't matter if it's a Saturday or Sunday, it's just 30 calendar days. And then we go through that process. We have, at least in our contracts here in Southern California or in California in general, we have contingency periods, which are periods we have 17 days to do inspections to the property. When you submit an offer, you get an offer accepted, you're going to have to come out with what's called an earnest money deposit. It's basically letting the seller know, hey, look, I submitted this offer, and it's usually 1% of the purchase price. So if the property is $300,000, the buyer is going to have to submit $3,000, 1%. $3,000 into escrow. Escrow will hold on to that money. It's basically letting the seller know, like, look, I'm serious about buying this property. I got some skin in the game. Once we do open escrow, we have 17 days to do inspections. Within that time, the termite inspection will be done. Our home inspection will be done. We'll make sure that, everything that you wanted to double check, either the schools or the neighborhoods, is up to par with what you're buying. After those 17 days, we remove that contingency. So if you were to back out of the deal after those 17 days because, say, you change your mind and you no longer want to live in this area or whatnot, then that $3,000 that you left with escrow, now the seller will be getting that $3,000 basically for wasting their time, in a sense,
Yeah.
But if there was something that was found with the property and a deal couldn't be struck and we aren't moving forward, if we pull out before the 17 days, you will get your earnest money deposit back.
So it's just pretty much there to protect both the seller and the buyer then during that period, during that escrow period.
Correct.
Okay, awesome.
Escrows could be 30 days, it could be 45 days. It's just very specific to that property. Every time I submit an offer, a good agent will always call the listing agent and try to find out as much information as they can from that listing agent. So when we are submitting offers, we're not submitting offers blindly. We're finding out, hey, do you have any other offers? What is your client situation? Do they need to live in the house an extra 2 weeks after the close of escrow? Do they need a 45-day escrow? Do they want a quick close? Do they want, a 20-day escrow? It just really depends. Generally, it's a 30-day escrow. As a realtor, with our inspection and everything, we will be done within those first 17 days. The last portion there, we're pretty much just waiting on the bank, on the lender, to get all that paperwork processed and getting that loan finalized. They take a little longer than we do.
So, best case scenario, not haunted. Worst case scenario, the seller is the Addams family.
Pretty much.
Got it.
I wouldn't mind living in that mansion, actually.
That hand running around, if that hand's going to move out, probably has a lot of stuff, all those gloves and stuff.
Yeah, but then you got Wednesday, Pugsley.
No, they just leave the hand behind.
Then he'll just do all the work for you. You'll never have to clean the place up. That's the one haunted house I will purchase. Other than that, I'm not in.
That's your best case escrow. Addams family.
Yeah, I'm cool with that. All right, well, before we go ahead and end this, as always, I just want to see if there's one thing that you want to leave the listeners with. If you could recommend that they start doing one thing now before they even think about purchasing a home and utilizing the VA, what would it be?
Definitely pay off your debts. Start working on your credit. And that's a big thing that I notice, specifically with VA buyers. There's a lot of debt out there, so start working on minimizing your debt.
Awesome. And real quick, how can the listeners who are looking for properties or homes in Southern California get a hold of you?
My cell phone number is 951-303-5947. I'd be happy to assist them.
Awesome. Thank you guys for joining us. Dan, thank you for coming in. Alan, thank you again for sharing some of that information. We look forward to talking to you again in the future and sharing some more info with the listeners.
Awesome. Thank you for having me.
Thanks for listening to The Unwavering. Please rate and comment on Apple Podcasts. Give us a 5-star and a great comment, and we may just read it on a future episode. Also, follow us on social platforms like Instagram, Facebook, and YouTube. Be sure to check back with us next week.